What is going on, guys? Welcome back to Stock Talk with Nico Criticos. Today, we're going to do another review for SMCI. I've been watching this stock for a while now. Started buying shares at $20 a share when it hit that back in, what, November? It's been that long now, $20 a share. Then rode it all the way up here, and now it's fallen back down. Picked up more shares around $30 a share, and now we're back up to $41 a share. This last week has been insane, up 50%, and I'm up a little bit over $1,100, which is just crazy to do in about 1 week. But we're going to do some more analysis on this because I've been talking to lots of people about this stock, and I said this is my favorite stock pick for 2025. I've gotten lots of good feedback on this, meaning people have good things to say about this company. They have good partnerships, good relationships with people like Nvidia and like Cleveland Cliffs. And it sounds like they have really good products and they're in a really good position. The problem is, here's the risk with investing in this stock anytime in the last 2 months or so, 3 months, is the fact that we cannot see any numbers after Q2 of last year. So we're going on what? We're close to 9 months now of no data on what the business has been doing. So that has been the risk. But when I was buying at $20 a share, even $26 a share, the risk was very low. I was paying whatever, 8 times earnings or something like that. So I was willing to take that risk. And then after the independent auditor came out and said that there's no fraud at the company, Supermicro said we're going to establish this plan to not get delisted from the NASDAQ. This all sounded like good news to me, and so I was happy to be a buyer of this stock. And that's why I'm having faith going into tomorrow, which they are supposed to announce earnings tomorrow, and I'm hoping that it's going to be good. When you look at the past couple of years for this stock, their numbers have been great. Look at the last couple of years of revenue. It's just up and away. Same thing with net income, very strong. Again, this is going all the way back to Q2 of 2024. That's nearly a year ago, and they were doing $1.2 billion. I would think that numbers would be drastically better. I find it hard to believe that they wouldn't be growing at least 10, 15% since then. So that's why I have pretty good expectations for this. So at this stock price, we're paying 13.6 this year for this year's earnings, and then next year we're paying 12 times earnings, right? So that's where we're at right now, which again, that's a very cheap PE. You have to think, look at any other stock that operates in this industry that grows like this company, all this stuff. They're going to be trading at probably 25, 35 times earnings. That's why I think the stock can easily be double where it is right now. This stock could easily be double, if not triple, within a year from now. This stock, I mean, the stock was already traded over $100 a share last year, right? It hit $120 a share last year. And again, that was with those earnings. So who's not? So most likely this company grew 15% or whatever. Let's see. What are they? They're expected to grow. Well, maybe those numbers are, maybe I'm undercutting them. They're expected to do 63% growth and then 22% growth next year. So this company should be like 40 times earnings, right? Like even 25 times earnings, which would be double what it is right now. That still is that's still super conservative. You go look at any other stock that operates in this industry. Some of them trade at 100, 200 times earnings, right? Look at Nvidia and stuff. Look at Vertex. There's a bunch of them. Look at Cadence Design Systems. All these stocks operate in semiconductor chip industry, and they trade at insane valuations. So why is this one trading at 12 or 13? Now, that's really, it's just because of the fear that's in the market right now. Investors don't have any confidence in this company because they didn't report the 10K and they didn't report earnings, and they're kind of slacking here, right? So let's say that, I mean, it's hard to get a precise thing here, but the bottom line is this stock was $120 a year ago. Their earnings should be higher, most likely. I mean, they're expected to grow 63% this year, right? So I would think the stock would, $60 for the stock should be easy, right? And then you look at, I mean, once they report earnings, everything looks good. I wouldn't be surprised if the PE did double from here, right? Like a 25, 30 PE, that's still conservative. If you want to push this to its limits, then I would say it trades at 45 times earnings, something like that, right? And then you're getting kind of ridiculous because then you're looking at what 45 times 3 is, then you're talking about, I mean, the stock could be 140, $150. That would be the limit for me. That'd be where I'd say, okay, this is getting kind of ridiculous here. But I mean, look at back in, yeah, this was, see, so it had this weird spike where it went crazy like that, but the growth is just insane. I mean, 63% growth is a lot. So that's why I'm just looking at this like the risk to reward is very attractive here. And so originally my plan was to sell a third of my position at $45, the next third at $55, and then my final third at $65, right? But honestly, I kind of want to even up it more. Now I'm thinking about changing it to $50, $60, and $70 because it just looks really attractive. It's like if they're a good company, the valuation's cheap, they're growing 65% and then 25% next year. The stock should easily double from here. If the earnings are going up, the PE is way too low right now. It should not be at 12 or 13. It should be at 25 or 35. And so the stock should easily be over $100 easily. So I think I want at least some shares ready. I want to save some shares for when it does go over $100. So now I'm thinking I probably won't even start selling this until it's, I don't know, closer to 60 maybe. Maybe in the 50s I'll start taking some profit, but I definitely want to keep some shares for when if it goes over $100 because I don't think that's out of the question here. So that is my analysis for SMCI. As for, what I buy, I mean, I bought on this day when it hit $26 last week. That's when I bought a bunch of shares that night. So to me, it was still a great deal then. Then as the week went on and you get into the 30s, it's starting to get, it's getting less and less attractive because what if their growth isn't that good? What if there is some bad news? What if anything could happen, right? Even if they beat on earnings, and some investors could still sell off this stock. It is possible, but I just think there's a very good chance the stock is going back to these ranges, right? At least 60, but most likely 80, and then eventually over 100. So from that perspective, yeah, you buy it at 40, you could still double your money. There's a good chance you'll double your money, I think, at $40 a share. But it's just getting, I don't want to say less and less attractive, but that's kind of what it is. So I probably won't buy any more shares around this price. But that's all I'm doing for this company. Thank you very much for watching, and I will see you in the next video.